You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, first day of August, 2024. Thanks for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. The first live broadcast is our live training room. Now, that's reserved for members only and those who are taking their 1 week free trial. If you haven't taken your 1 week free trial yet, when Michael comes on in a little bit, he'll walk you through step by step how to take the trial. Now, when you take the trial, you're not just gaining access to the live training room. You're actually getting access to all the resources that our passport holders have access to for 5 consecutive trading days. So if you were to sign up today, we would get your desktop set up today, get your indicators indicating today, and then your 5-day trial would actually start tomorrow, which is Friday. But worry not, the weekend doesn't count against you, even though the markets are trading, some markets. So you will get tomorrow and then 4 days next week. So it doesn't matter what day of the week or weekend or hour of the day you sign up for the trial. Once we've got you set up, you'll get 5 consecutive trading days, even if it stretches over a weekend or a holiday. Now, when the live training room ends each morning at 11:30 a.m. Eastern, we do take a 30-minute break and then come back for the afternoon broadcast. Now, this broadcast, unlike the morning broadcast, this broadcast is open to the public. Everybody everywhere on planet Earth with an internet-connected device. There's 2 different ways to join this afternoon broadcast live. The best way, go to mytradingiq.com, scroll down where it says noon broadcast, click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. In that email, there is a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit there is you'll have access to the question box so that you can ask questions and participate in the discussion. Of course, there will be days you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy and you can't join live, but you do want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember, youtube.com/CFRN. You've already got the YouTube part memorized, so just CFRN. That's all you got to remember. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there's over 2,600 daily episodes archived for your educational and viewing pleasure. If you're new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week, but thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 weeks, 6 months, 6 years, even more. Just pick some days at random. Watch a little bit, fast forward a little bit, jump to another day, week, month, year. Do the same thing. Obviously, the more recent episodes are going to be more relevant as to what's happening in the markets and the world right now. youtube.com/CFRN. Here's our daily schedule. We start out with our daily devotional, word of prayer, some market news, a recap of the Logic 247 alerts and the concierge trade alerts. Then about 12:50, Michael joins us, gives us a recap of what happened in the live training room this morning. Then we'll go live on the TradingView platform and do some live trading for about 30 minutes. And then I'll come back, I'll finish the recap of the alerts if I haven't, and then we'll wrap things up with our good word for the day. So, let's get cracking. Now, the topic of our devotional this week is about putting on the whole armor of God. Today's scripture, Ephesians 6:16. This is where the Apostle Paul says, "In all circumstances, take up the shield of faith, with which you can extinguish all the flaming darts of the evil one." Now, in the previous 2 verses, which we talked about on Monday, the belt of truth. Tuesday, we talked about the breastplate of righteousness. Yesterday, we talked about the gospel of peace as shoes for feet. So today, shield of faith. Unveiling the shield of spiritual resilience. In the battlefield of faith, spiritual preparedness is paramount. As we revisit the armor of God, our attention turns today to the shield of faith, a protective barrier that plays a pivotal role in safeguarding believers against the relentless assaults of the enemy. Ephesians 6:16, which we just read, is the anchor for the shield of faith, urging believers to take up this essential piece of armor. The scripture introduces the metaphor of a shield, unveiling the significance of faith as a defensive stronghold. In the historical context, shields were indispensable tools for ancient warriors. Crafted from sturdy materials such as wood or metal, shields served as a primary defense against the attacks of the enemy. The shield of faith, spiritually speaking, mirrors this ancient defense mechanism, providing a barrier against the spiritual onslaught that believers face. The shield of faith is symbolic of a robust trust and confidence in God. Like a physical shield deflecting arrows, faith extinguishes the fiery darts of doubt, fear, and temptation launched by the adversary. It serves as a formidable defense, ensuring believers stand firm in the face of spiritual warfare. Prayer and Scripture form the foundational materials for reinforcing the shield of faith. Regular communion with God through prayer and reading of the Word builds an impenetrable barrier, enhancing spiritual resilience. A strong shield of faith becomes an indispensable tool in the crucible of life's challenges. Faith empowers believers to overcome doubts and confront adversities with unwavering confidence, trusting in God's sovereignty and His promises. In the Old Testament, God assured Abraham, "I am your shield." Abraham's trust in God's promise and protection exemplifies the ancient concept of relying on a shield for defense. Now that's Genesis 15:1. But if we jump to the New Testament, Matthew 4:1, we find Jesus in the wilderness. And Jesus wielded the shield of faith by countering Satan's temptations with unwavering trust in God's Word, demonstrating the practical application of faith in overcoming spiritual challenges. Enumerating historical shields such as the Greek hoplon, the Roman scutum, and medieval shields provides a visual understanding of the varied shapes and materials used in crafting these protective barriers. Now here's your practical applications. Regular prayer and Scripture engagement fortify the shield of faith, enhancing spiritual preparedness. Faith empowers believers to confront life's challenges confidently, trusting at all times in God's guidance and provision. Standing side by side with their shields, they believe in forming a united front against spiritual attacks, emphasizing the communal aspect of faith. In conclusion, the shield of faith is an integral part of the believer's armor, providing a robust defense against the adversities encountered in the journey of faith. By exploring its historical context, understanding its symbolic significance, and applying it in daily life, believers can be resilient and fortified by an unshakable faith in the Almighty. Join me in a word of prayer. Heavenly Father, we come before you today, gratitude and humility, seeking your guidance and your protection. As we take up the shield of faith, may it extinguish all the fiery darts the evil one will throw our way today and every day. God, we ask that you strengthen our trust in you so that we can stand firm against every challenge and temptation. Help us to rely on your promises, to find refuge in your unwavering love. May our faith be our shield, guarding our hearts and minds in Christ Jesus. And it's in Jesus' name we believe and pray. And everybody said, amen. Amen. And happy Thursday. Let me give you the numbers from around the world. Been pretty active out there. these past 24 hours. I'm going to start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow is down 436 points. That's a little over 1%. The Nasdaq's down 221. It's over just at 1.25%. S&P 500 is down 43. The Russell 2000 is down 65 points. That's almost 3%. Now, we always pay a lot of attention to what the Russell is doing, because while the Dow represents the 30 blue chip stocks, and the Nasdaq represents primarily the tech stocks, the S&P 500's the large cap stocks. The Russell 2000 index, that's 2,000 small cap companies. And that's where things usually start, at the street level. So we always keep a special eye out for what's happening with the Russell. And to see it down 3% on the day, it's a pretty strong statement. Crude oil is also down 64 cents, trading 77.27 last. That's a drop of almost 1%. Gold is up $16.60, trading 24.8960 last. Silver down 30 cents, trading 28.64 last. That's a drop of a little over 1%. In the Asian markets at the close, the Nikkei back at it again, down 975 points. It had a couple days in the sun, and now it's down 2.5 points at the close. The Shanghai down 6, the Hang Seng down 39. And in the European markets at the close, FTSE down 84, the DAX down 425, the CAC down 161. So for the FTSE, that's a drop of over 1%. For the DAX, that's a drop of well over 2%. And for the CAC, again, a drop well over 2%. So we had a red day in Asia. It was a red day for the UK. And it's a big red Radio Thursday here in the US of A. Kind of interesting. With the Fed announcement yesterday, boy, the markets just a huge run to the upside. And then they didn't. We'll see that as we get to the charts. U.S. stocks fell today as weak economic data trickled in, despite better than expected Meta results, and hints from the Federal Reserve of a September rate cut. Yeah, but it was, I don't even know if you can call it a hint. He said it's still on the table. We'll talk more about that. S&P fell almost 1%. Now, we've already covered that. 10-year Treasury yield moved below the 4% level for the first time since February, hovering near 3.98%. The latest ISM data out to this morning showing the U.S. manufacturing sector sank further into contraction territory during July. Other releases showed jobless claims rose to an 11-month high last week, and construction spending unexpectedly declined in June. The readings reflect a cooling of the U.S. economy that revive concerns about the risk that interest rates at historic highs are driving towards a recession. Stocks initially moved higher after Fed Chair Jerome Powell bolstered the market's confidence with a September interest rate cut, saying it could be on the table. Traders mostly expect a 25 basis point reduction, but bumped up bets on a 50 basis point move after policymakers held rates steady. The market is now looking to tomorrow morning's release of the July jobs report. And investors are watching for quarterly results, especially from big tech names. After Meta's strong report late yesterday, shares in the Facebook owner paired an earlier climb of 8% as the market appraised its earnings beat and signs that solid digital ad revenue will give its AI investments time to pay off. Earnings from Apple and Amazon, due after the bell today, could test the meta-driven bullishness for techs. They will also test the chances the AI trade can deliver on its promise, which took a hit from earlier disappointing Magnificent Seven earnings. Well, after yesterday, Jay Powell is on a collision course with the 2024 election. When asked at a press conference if the Fed could in fact remain apolitical in taking such an action, he said, "I absolutely do." It's kind of like when Biden said, "Don't." Anything, this is back to Jerome, anything we do before, during, or after the election will be based on the data, the outlook, and the balance of risk, and not on anything else. Okay. The collision of Fed monetary policy and a red-hot election season is now officially in play after Powell signaled the Fed might cut rates at its next meeting on September 17th and 18th, as long as inflation continues to cool. Powell said, "We think the time is approaching." Now, we already talked earlier in the week about all these regional banks on the verge of going under, bought the long bonds. Now, that's what took down Silicon Valley Bank. These regional banks are counting on this September rate cut. If they don't get it, it could effectively put them out of business, unless the government decides to fire up the printing press and bail them all out. When asked if there was a growing sense of confidence on the Fed's Federal Open Market Committee that a cut could be made in September, he added, "Yes, but as long as the data supports it." It's a pretty weak yes. A September rate cut could cause the central bank to face political criticism from both sides of the aisle in Washington. Lawmakers from both parties have signaled they would criticize the Fed if a decision made at the last meeting before Election Day didn't go their way. If Powell and his colleagues choose to keep rates at a 23-year high, a growing chorus of Democratic critics calling for cuts may reach a crescendo. But if policymakers do indeed cut, Republicans, from Donald Trump on down, will be sure to cast the move as caving to election year pressure. See what happens. The number of Americans filing new applications for unemployment benefits increased to an 11-month high last week, suggesting a softening in the labor market, though claims tend to be volatile around this time of the year. So maybe it's just a seasonal thing, A report from the Labor Department also showed the number of people on jobless rolls swelling in mid-July to the highest level since late 2021. Data could fan fears of a rapid labor market deterioration, which surfaced last month when the data showed the unemployment rate rose to a 2.5-year high of 4.1% in June. And in more bad news, the measure of U.S. manufacturing activity dropped to an 8-month low in July amid a slump in new orders, but that likely exaggerates the industry's struggles as production at factories rebounded sharply in the second quarter. That's just word salad. It means nothing. The ISM report, the Institute for Supply Management, said on Thursday, our tax dollars pay for this crap, said on Thursday that its manufacturing PMI dropped to 46.8 last month, the lowest reading since November, from 48.5 in June. A PMI reading below 50 indicates contraction in the manufacturing sector, which accounts for 10.3% of the economy. All eyes this afternoon on Apple and Amazon. It will be critical to give direction to the NASDAQ 100 after a volatile period marked by some of the benchmark's worst and best days this year. The pair are the last two mega caps to release results until NVIDIA at the end of August, and will set the tone for tech investors for the coming months. The reports due after the close today will be scrutinized for how artificial intelligence is driving growth for Amazon's cloud computing unit, and how the new technology is expected to boost demand for the next iPhone. They'll also give investors some insight into the health of consumer spending. Apple is under pressure to give more information about expected demand for its next iPhone model, which will include artificial intelligence. You think they've been spying on you in the past? Oh my goodness. Shares have rallied 15% since the firm unveiled long-awaited new AI features in June, and 29% since last quarter's estimate-beating results, even after the recent rotation out of the tech sector. Amazon shares are up about 25% this year. Amazon shares rise as much as 1.9% in early trading today, while Apple shares gain as much as 1.1%. So obviously, investors and traders are expecting a good earnings report. UK bonds rallied sharply, and investors braced for further interest rate cuts from the Bank of England this year after it eased monetary policy for the first time since 2020. The yield on 10-year UK government bonds fell as much as 11 basis points, 3.86%, while the 2-year rates slid 15 basis points, largest drop this year. The Monetary Policy Committee voted 5-4 to lower the key rate to 5%, though they gave no specific guidance on where interest rates may settle, nor the speed of cuts needed to get there. Your friend and mine, Don Lemon, is suing Elon Musk after a partnership with the X social media platform was scrapped, with Lemon claiming, you may call him Lemon, he calls himself Lemon, was scraped, claiming the X owner, Elon Musk, unfairly terminated their deal, refused to pay him, and used the media personality's name to attract advertisers. The CNN got rid of him because he couldn't attract advertisers. The lawsuit was filed in California's Superior Court in San Francisco. X canceled its partnership with Don in March after he said Musk would be his first guest in an interview. His approach was basically just CNN, but on social media, which doesn't work, Musk said in a post on the platform, adding that Lemon was welcome to build viewership on the platform. Well, now a guy like Don Lemon, he does not believe in merit-based accomplishments. He's just looking for a handout. Let me move on. More news? Yeah. U.S. construction spending unexpectedly fell in June, and the prior month's data was revised lower as higher mortgage rates weighed on single-family home building. The Commerce Department Census Bureau said today that construction spending dropped 0.3% after a downwardly revised 0.4% decline in May. Economists polled by Reuters had forecast construction spending rising 0.2% after a previously reported 0.1% dip in May. Construction spending advanced 6.2% year on year in June. And again, Meta reported their earnings, and shares soared more than 9% in early trading today after the company reported better than expected second quarter earnings results yesterday. And despite warning it expects to see significant capital expenditure growth in 2025. So there you have it. All the news fit to read. Logic 247. That's our 24/7 around-the-clock E-mini alert service. Not just E-minis, but also crude and gold, silver, euro, bonds. We're in week 313 of Logic 247. And over those 313 weeks, we've issued over 17,400 individual handcrafted alerts. And we've averaged on a weekly basis 20% or less of the alerts being stopped out based on market structure, and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. Since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 66 alerts. One never triggered. Still waiting on 13. 52. Now this recap was good through 11 p.m. last night. Valerie, I think, was out of town, so she might send me an updated recap. So this doesn't count anything that went out today, or anything that triggered today out of these waiting. However, at the time she did the recap last night, we had 52 actionable alerts, of which 8 or 15% would have been stopped out based on market structure. And that simple process we teach all of our passport holders. Now, the purpose of the logic alerts, they give you an entry price, an initial target, additional targets, and a final trade to target. The purpose of the alerts, though, is not for you to just trade the alerts so you don't have to worry about learning how to trade. I know people make that mistake, but there'll come a day when they regret that. Don't do it. Use them as they're intended, to learn how to read the chart. When you pick up a newspaper or a good mystery novel, you read words and sentences and paragraphs. But when you bring up a chart, that's a whole different language. And somebody has to teach you how to read it and interpret it properly. The logic alerts will do that, again, if you use them properly. Tomorrow, I'll go through the whole list of all the logic alerts for the week. Now, if you use the logic alerts as they're intended, you will learn how to read the chart. Then the next step in your education will be the CTAs, the concierge trade alerts. Unlike the logic alerts, which come out around the clock, CTAs are published as a static report shortly after the Globex open each evening. So the Thursday session began last night at 6 p.m. Eastern, and it should say 6:01, but I like to use round numbers, so pretty much a minute after the bell. There really isn't a bell at Globex, but you get the idea. So all of our members and trial members had all of these targets a minute after the market opened last night. So what do you do with them? The first thing you do is go to the 30-minute chart of whatever markets you actually trade. Make note where price is at the time the report is published. Always be between these two numbers in every market. Then draw a line in the sand at the long target, a line in the sand at the short target. These will serve as great visual cues to make sure you stay on the right side of the street. Price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. Now, BBC just stands for bull, bear, cross. It's the green line you see on all of my charts. Price gets above the green line, we're bullish, we anticipate higher prices. If price gets below the green line, then we're bearish and we anticipate lower prices. All alerts are generated on the 30-minute chart. But there's nothing magical about 30 minutes. It's just the time frame I chose years ago. And if it's not broke, don't fix it. Or screw it up. Now, you can apply the BBC. Daily chart, a weekly chart, a monthly chart. Obviously a 30-minute chart, a 5-minute chart, a tick chart, or a range chart. It functions the same no matter what chart you put it on, what market or time frame. Functions the same. Price gets above the green line, expect higher prices. Price dips below the green line, expect lower prices. It's really simple. Now, as I said, with the logic alerts, I give you the entry price, initial target, additional targets, etc. This is where you start learning to look left and find those obstacles, targets, and windows of opportunity yourself. And this is about the point where you're starting to understand how price behaves at a weekly trading zone. That's important because price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon, price is above the 30-minute BBC. It's trying to reach the weekly zone above. If price is below the 30-minute BBC, it's trying to reach the zone below. Published the zones since December 14th of 2009. This December will mark 15 years. They come out Monday morning at 6:15 a.m. Eastern, and once they're published Monday morning, they're carved in stone for the entire week. They don't change in any way whatsoever. Beyond that, just resist the urge to complicate things. As long as you know which way the wind is blowing, it's pretty simple. Reach your goal for the day. And if you were following along in the discussion group this morning in Telegram, either the Passport discussion group or the trial discussion group, we had a pretty good idea of what price was doing, where it would potentially find support, where we asked the question early today, because we had green up here, but I questioned in the discussion group, is this just a head fake? Well, first spot where we anticipated support was at the step line. Next, red and falling. Next, the 38% fib retracement. Now this 38 has served as good support for the last 1, 2, 3, 4 out of 5 trading days. So if we continue lower, now keep in mind, red and falling is directly below price, so that could be good support. But if we trade through red and falling, and it's a huge air pocket down to the 38. We've spiked the 38 a couple times, effectively putting in a double bottom. You look at the horizontal line on my cursor. So we want to see price get below 54.29. Then we've got this little triple bottom over here. Could be potential support around 5400 to 5402. And if we trade through that, then we're at the 50% fib retracement, 5370. Now, the reason I look at a daily chart every day is to gather information. I want to know what the institutional traders are doing. They look at daily, weekly, and monthly charts. The way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has to do with account size. You see, the institutions are the ones that actually move price. So if you'll teach yourself to spend 2 minutes with the daily chart of whatever market you trade, just 2 minutes before you start trading, get an idea which way the wind's blowing, okay? What you're doing is you're literally looking over the shoulder of the people, the deep pockets that move price. So all you got to do is what they're doing long enough to get your goal for the day. This is a big down move. Okay? Yesterday we had a big up move. Okay? But it's starting to look more and more like it could have been a head fake. Whether you trade futures, stocks, crypto, Forex, ETFs. If you'll make it a part of your daily routine to spend 2 minutes with the daily chart before you drop to your smaller time frames and start trading, I believe you will see your results change for the good over time. Now, this is the 30-minute chart of the ES, as I said. All alerts, both the logic and the concierge trade alerts, are built on the 30-minute chart. These vertical lines separate today, Thursday, from Wednesday, Tuesday, Monday. When price rallies up to a zone, we expect resistance. When price drops to a zone, we expect support. Okay. Now, See this bullish cross here? Whenever you have a bullish cross that leads to an extended move, the first time price revisits that area will almost always be good support. And we're talking about 54, 78, 79. Put in a low so far at 54.83. Now, not only could it be good support, but it might be good for a bounce. Here's where we opened last night. We gapped higher on the open, and it took us right up to the CTA long target. Had a leg and a retracement and a leg, but blue and climbing got above price, directly above it. So now it becomes resistance, potentially, because it's on its way to becoming red and falling. Pull back to the BBC, as you can see, holds more often than not, whether it pulls back from above and below, even if it spikes it. Only three things happen at a weekly zone. 70% of the time is consolidation. 20% of the time is rejection. 10% of the time, the slice. See how this 30-minute candle sliced through the zone like it wasn't even there? When that happens, typically, when this slice runs out of steam, price will retrace back to the zone it sliced through. Now, when this candle opened, it was green, but there was not enough buying interest to push us up to the zone. We just continued on down to the next zone. And right now, that's where we're sitting. We've spiked it, but we're consolidating. Again, that's what's going to happen 70% of the time when price encounters a zone. Now, this was the run-up yesterday. And you'll recall, Michael and I were talking on the afternoon broadcast yesterday. We said when the dust settles at the end of the day, price will probably be back about where it was. So we had the run up, we had the run back down, but then we did actually climb into the close. And when we reopened last night at 6 p.m. Eastern, we not only continued to climb, but we actually took out the high of yesterday. That was all short-lived. What do we got going up here? Triple top on the 30-minute. We came down to the zone, found support. Support will always send the market looking for resistance. And then the market's going to go look for support. Came down. We hit the long target several times. We hit the short target. Traded through the short target. And we're most likely heading to this area here, which most likely will be good support. Keep your eye on that. It's important. Same is true of a bearish cross, just in the opposite direction. On the Dow, this was that little window of opportunity we drew in yesterday afternoon on this afternoon broadcast. And as you can see, that filled beautifully. Price came back to the VBC and the weekly trading zone. Now, these are the zones that were published Monday morning at 6:15 a.m. Eastern. Remember, once they're published, they're carved in stone. They don't change in any way whatsoever. So when the Dow opened last night, we consolidated for hours. We caught a drop just below that bullish cross. Bounced back up to the zone resistance. Sent us down to blue and climbing support. Now this spike right here, that's the Wall Street Open. I never trade those 30 minutes. Okay. Some call it the professional half hour and some call it the amateur half hour. I don't call it anything. It's just too volatile for me. I prefer to wait and allow the market to get back to its normal rhythm. That's just me. It's a personal preference. Michael hits the ground running right at 9:30. You do what works for you. So where's price trying to go right now? Oh, we got a weekly trading zone right here at 4430/35. And the current low is 4464. On the Russell. Different story on the Russell. Is that you, Michael?
That is me.
All right, guys, we'll pick up with the Russell when I come back. Michael's going to give us a recap of what happened in the live training room. Then we'll go do some live trading on the TradingView platform for 30 minutes. When I come back, we'll finish the recap of the alerts and wrap things up with our good word for the day.
Yes, and it's Thursday, so partners meeting tonight. Don't forget.
Be there or be square.
Yes, and if you're gonna be there, have your questions ready.
Yes,
Right,
please.
so jump right into
Start
it.
thinking about it now. Write them down, okay? And you can send them ahead of time. There's no reason to drag it out, okay? We'll stay as long as you've got questions, we'll stay and answer them. But if you don't have your questions ready, you've had all day to get them ready, well then, apparently
Get in, show you some things.
You're more interested in something else than you are about learning how to trade. So, but if you're doing good, don't just make up questions like, well, I want them to think I'm interested. No, we're not asking you to make stuff up. We're talking about real issues that you're having. Maybe you're having problems with your DOM. Maybe you don't know how to read a certain indicator. Maybe you don't understand, it's something about price action. Whatever it is, just have your questions ready, please. All right, looks good, Michael.
Yes. All right, here we go. Good afternoon, everyone. Today is Thursday, the first day of August, 2024. We're all the way into August. That means we only have 1 quarter left, right? August, September, October, November, December. Well, 1/3 left. Anyway, it's 8 out of 12 months. It's the beginning of the 8th out of 12 months is what we have. Anyway, either way, doesn't matter. We rolled the 20 contracts today, guys. 20 contracts in the 24/20 blueprint. Woo-hoo. We'll get into that in a minute. If you've not taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. There's no credit card required for the trial. All right, when you click on that, it will bring you to this registration page. Yes, it'll bring you to this registration page. All right, I know there's only 1 day left in this. Tomorrow we'll have a fresh round of days in there for all of next week. If you do take the trial today, you get to take the rest of next week as well. All we ask for is your first name, your last name, your email, your phone number. Down here, there are 5 multiple choice questions. If you have NinjaTrader, give us the machine ID. If you have TradingView, give us your login ID. If you have both, give us both. If you only have Ninja, I want to encourage you to take the TradingView trial. All right, hit the register button. When you do that, we will be notified and we'll be able to enable all the indicators for you and get your indicators indicating. All right, so here we go. The first day of August. So the spreadsheet doesn't have a lot in it, but we did get a good start to the month. Last month, we started out with our lowest start of the year, and we ended with our best month of the year last month. So this month, we had a pretty good start. Not our best start, I don't think. 545 per contract is what we ended with this morning. And if I go back and look, yep, 660 in March we had, and 550 in January. So it's our third best start of the year. But 660, when we started with 660 that month, we had our second best month of the year. I guess what I'm saying is the first day doesn't really mean all that much. But this one, it took us 6 minutes and 2 trades to get to the goal for the day. At that point, we're up $2,200, and we took a total of 12 trades. All right, so on the month now, first day, 545, averaging 545, and on the year now, we're at $58,497 with 1 contract. That's over 142 business days, averaging $411 per contract per morning session. Now we rolled to 20 contracts, so this is the end of the 24/20 blueprint. It's actually turned into the 2020 blueprint for me. This is the end of the 2020 blueprint. Well, it's the beginning of the end of it, all right? At the end of the month will be the end of it. What I wanted to point out to you all is that we did everything the same way we normally do, and today it took 6 minutes and 2 trades to get to the goal for the day. So just with 20 contracts on this morning, that brought the daily average. If you were trading one contract starting in January, doing the 24/20 blueprint, you rolled to your 8th contract today. And so you have been up $880 after 6 minutes this morning, all right? $880 after 6 minutes and 2 trades. You'd be averaging $1,671 per hour on the year, all right? If you did it like me, you started in January of last year. After 6 minutes today, you've been up $2,200, and you'd be averaging $6,892 an hour, right? That is that. It's the beginning of the final month of the 24/20 blueprint. Exciting times. All right, so we did trade something on everything. I'll start with the NQ this time, all right, because we only had one trade on the NQ. So we had a bunch of blue arrows there on the NQ this morning. We'll do this and go all the way back to the beginning because that's where the trade was. There were a whole bunch of blue arrows, but we're going to get back there and show you. Show you all that. Look at all those bars, how fast it's going by. And we're not even to 11 o'clock yet. And there goes 11. $10.30. 10:15. 10. 9:45. And 9:30. That's good right there. All right. So, as I said, we did not do a lot with the NQ today. All right. We took one trade on it, but look at the blue arrows. Blue arrow, blue arrow, blue arrow, blue arrow, blue arrow. There's our one trade. We picked up 30 ticks on that one. All right. And there was another one there, another one there, and another one there, and another one there. And there were just tons of blue arrows in here. If you just traded the blue arrows today, if you didn't trade anything but the blue arrows, you would have done just fine. You would have made out really well today on the NQ. Now, I'm not going to go through everything because we just did a half an hour and took all those screen slides. So I'll just go right to the end and I'll do a little bit here of what just happened during the break. We had a green arrow right here. All right, we had a nice green arrow right there for the short. Let's see if I scroll back. We had a blue arrow here that would have stopped you. Blue arrow here, you would have gotten some profit. If you were just getting the goal for the day, you would have quit after this right here. All right. This I wouldn't have taken. The outer bands are too flat. That right there gave a gap down. So that gap down probably gave you the goal. I mean, probably gave the whole 30 ticks, right? It was 188.75 and it gapped all the way down to 182.75. So gapped down 6 points, 24 ticks. You had to be quick on that to be able to lock in some profit right away. This one right here had a nice move up, and this is all during the break. All right, nice move up there. That one would have stopped you. That would have been, well, if you took it, it would have stopped you, but you would have had all the profit from that one first. Anyway, there's just a ton of trades there on the NQ. I'm not going to go through them all because there were so many. I only took that one trade, so we ended up with plus 30 on the NQ this morning. Now, we'll go back over here to the YM. We took a bunch of trades on the YM. Actually, not a bunch, but a fair amount. We're going to go back to the beginning, do this, and bring us back to the beginning of the day. There were some really nice trades there on the YM this morning, too. We'll get into them here in just a few minutes. Here we are. All right, so our very first trade on the YM was right here. We ended up with a break even on that. And the next trade, okay, and the next trade was here on the YM. That's where we got the goal for the day. We picked up 21 ticks on this trade right here. Right. After that, right here, we picked up another 2 ticks to get us to 23 on that huge move down. And sliding all the way over here. And we picked up another 5 ticks there to get us to 28. Right, and that was all the trading that we did there on the YM, I think. There were more trades in here, some nice, look at those blue arrows right there. Perfect blue arrows right there. but I was doing the lesson plan, so I didn't get into any of that. Now, this is all during the break. More blue arrows in there. That one would have stopped you out. That one, if I'd have done it, it'd probably stop me out to the tick right there. Okay, and slide it all the way over here. Nothing there, nothing there. Neither one of those blue arrows would work out. I wouldn't have taken that. The outer bands are flat. That one I would have taken. I would have stopped out. That was it for the YM this morning. We ended up with plus 28 on the YM. All right, we did the NQ. Let's do the Russell. The Russell is where we actually had the most trades, but it was only 5. But still, the most. But we'll go back to the beginning of the Russell here, and we'll be able to get into that one. Hang on, we're getting there. See, there was a lot of movement today. That's why there are so many bars in here. Lots of movement today. All right. Here we go. So we have here, we're sliding all the way over here. We don't have anything here on the Russell yet. There you go. Our first trade on the Russell was right here. We picked up 6 ticks on the first trade right there. The next one we stopped out on right here. That looks like it went 4 ticks in a profit. I don't know how I ended up stopping out on that, but I did. It doesn't look like it pulled all the way back up to stop me out, but somehow I ended up stopping out on that. So I ended up at -4 after that trade. Then the next trade here, I picked up 20 ticks on, got me to plus 16. And then the trade right after that, I picked up 30 ticks on, got me to 46 on the Russell. And I don't think I traded much more after that. There were some nice trades in there, some nice blue arrow trades. But once I got into the lesson plan right here, there was a blue arrow there. I took a trade right in here. It looks like, I don't know if it's in the right place. I took a break-even trade somewhere in there, it looks like. Nice blue arrow there, blue arrow there. The purple arrows, remember the purple arrows, you want to have the ribbon be spread whenever you take a purple arrow, all right? And looks like some of those blue arrows didn't work out well at all. A couple of them right in a row right there. And there weren't too many more. This one worked out okay. This one worked out just fine. So those two would have gotten back what you lost on those prior to. And then some if you let them run. But again, we're not trying to trade 100 times. You know, I got the goal for the day after 1, 2, 3, 4. It took me 5 trades to actually get to the goal. But I was up 46 ticks at that time. That's twice the goal. There was another trade right there, a nice blue arrow there, another one there that worked out. Purple arrow in here. I see when the ribbon was spreading out. It wasn't spread, but it was spreading. That is also a good thing right here. It was spread. You get the purple and the blue at the same time. That's usually a really good trade. And we're working on the blue arrow right here, right now. And that was it for the Russell this morning. All right, so we ended up with plus 46 on the Russell. The ES, we had a couple of trades on. Now I ended up doing well on the ES, but there was one trade that I took. I had like 20 ticks on, but I didn't get to count it because I made a mistake taking it. Sliding. Here we are. All right, so our first trade in here on the yes was right here, and we picked up just 2 ticks on that. All right. I think the trade that I took that I didn't get to count was this one right here. I didn't get to count that. And I got 20 ticks on that. And, or it might have been, I thought it was going right into a no trade zone when I did it. Anyway, there were some more nice trades in here, some more blue arrows and nice trades in here. I took this over here and I ended up with a break even on it. And some more nice trades in there, as you can see. And that was during the break. Now, during the break, there was another blue arrow there that would have been a break even, and it's going sideways right now, a little bit choppy and sideways. So that is what it looked like this morning for us in the room. I want to first let me go over the recap one more time. Today is the today. Here we are. Okay, today is the first day of August. We're got our goal for the day after 6 minutes and 2 trades. We're at $2,200 at that point. We are at 20 contracts now in the 24/20 blueprint. This is our 20th month, month by month by month, having one contract. The slow road to it. So we're up $545 a contract this morning, all right? And that's how we're going to start the month. We've now gone 142 business days this year, getting our goal. So that's every business day this year we got our goal. And 57 business days since our last non-green day. 304 business days since our last red day. Now, a red day is when I don't get the goal for the day and I end negative. So I haven't had a red day since July, I think, of 2023. All right, and that's all that stuff. Now, once again, for those of you guys who are in the YouTube stream, who might just be coming on right now, if you have not taken a free trial, go here to mytradingiq.com. Click on the purple button here. There is no credit card required for the trial. If you start the trial today, you'll be able to run the trial into next week, okay? There's going to be a switch in the registration information. There'll be new information available tomorrow, but this information is good for, well, tomorrow. This is the day that is good for the morning session. Okay. This is the information for tomorrow. So go here and fill out the spreadsheet for tomorrow. Once you do that, you'll automatically get the update when the update comes out for next week. All right. That'll come out Monday morning. You'll be emailed that. I think the new trial people get emailed it, but everybody else, it gets sent to Telegram. All right. It's stuck in your Telegram folder, the Telegram channel in the CFRN Weekly Trading Zone and Trading Room update. This is where it gets put. Right, every week Monday morning at 6:15 a.m. See down here at the bottom, 6:15 a.m. It gets posted here in Telegram. Okay. All right. That is that. So let's get back into the trading now. Okay. There was one thing I wanted to show you guys, and it was something that I showed earlier. I want you guys to really start thinking about things like this. Okay, you see, this is a 50 range chart right here. And this is a 50 range chart with the Sniper TV Trades beta on it. But the thing about the 50 range chart is even if we do it over here, like let's go here to our 4 and we'll do the YM here. And we'll stick this on a 50 range chart. Okay. The YM with what we normally do on a 50 range chart, you're not going to get a lot of deep pullbacks, so you're not going to get a lot of blue arrows and green arrows, but you're going to get a lot of the black arrows. Using the same stuff that we always use, right? The green arrows, all that. You're going to have a lot fewer trades, but the trades are going to be more meaningful. Now, I know with a 50 tick range bar, your stop's going to be like 55, 60 ticks maybe, and that's too much. You know, that's $275, $300 a contract, which is too much if you're trading the regular contract. But you trade micros. If you trade micros, and let's just go to the MYM, U 2024. All the same things with micros. If you trade micros with 3, 4, 5 micros on, your risk then is back down to something that you can tolerate, back down to $100 a contract or less. You know, if you trade 2 of them, it's back down to the same thing, you know, $100 a contract or less. But you're looking to make, 50 to 100 ticks every trade. You're not looking to make 5 or 10. You're looking to make 50 to 100. So, the risk is cut in half. You get the fewer signals, but more meaningful signals, and your risk is cut in half. Your risk actually maintains the same, but you have the larger time frame. So it's not jumping around all the time on you, and you're not, you don't have to be right on top of your game to be able to take the trades. Look at all these green arrows in here, all those green arrows, all these black arrows right here. The black arrows are going to be more meaningful if you do this. Black arrows become more meaningful because you're not likely to get the deep pullbacks. When you're in a strong trend like this, the deep pullbacks aren't going to come as frequently as they do with a smaller time frame. Okay, so I just wanted to present that to you now. Get you start thinking about it, right? This is using our regular stuff, all the stuff that we normally use right in here. Okay. All right, so let's get back into trading now with our regular stuff back here. I mean, all the weekly trading zones and everything that we normally use, nothing changes when you go to a higher time frame. Nothing changes. All right, the weekly trading zones are all still in the same place. Midpoints are all still in the same place. The thing that changes is going to be your risk and your target. Your risk will be like 55, 60 ticks, and your targets will be like 75 to 100. Now you'll start locking in profit when you get 20 ticks in profit. I start going to break even when you get 20 ticks in profit or something like that. You know, I just want you guys to start thinking about that. Okay. As we round up the 2420 and finish off the 2420 blueprint. All right, over here, this is the MIM. There is a trade there on the YM too, I'm pretty sure. Let me change this back to the YM. Okay, change it back to the YM because I don't have an MIM open right now. Okay, it was a purple arrow trade over there on the YM. It wasn't a regular trade. The NQ is pulling back, but it's in no trade zone. The ES, we want that to go back up and test the ribbon. The Russell, we are testing the ribbon right here. We've got a high on that, 94.7. So you'd be looking at 93.9 on a down close there on the Russell. Okay, 93.9 on a down close there on the Russell. And now it's pulled up even more, so that number is no longer valid. Now you're looking at, well, right there. This is what you're looking at for the green arrow, 94.5. Okay. There. All right. So I'm in at 94.3. It's pretty close to 94.5, but not quite there. And it looks like it might just stop me out. It didn't quite go 4 ticks into profit, so I tried to jump in after the fact, and hopefully it's not going to punch me right here. I think we're going to get 4 ticks in profit here. I'll get ready to drop it at break even as soon as I get 4 ticks in profit. Okay, I'll be prepared for that. And if it stops me out, it's going to stop me out, but hopefully it won't. The NQ is about to put together a short trade over there. The ES also just put together a short trade. Okay, it did stop me out, so I don't get to drop that, but the ES just put together a short trade to the ribbon. All right, so the Russell did stop me out. Now the ES trade, I'm also in. I'm throwing my stop at break even on that one. I'll bring it over and show you. Here it is. That's a ribbon trade, and it just took me out of break even. The NQ's also got a ribbon trade going over there, but the last green arrow way over here needed to put in a lower swing. All right, way over there needed to put in a lower swing. So that's not really a valid. This last green arrow here on the NQ is not a valid trade until we get a lower swing. Okay, it just went to a no trade zone. So I got a break even there, break even, well, on the ribbon trade right here. I didn't get a lower swing on the ribbon trade, so I can't do the blue arrow right here, but you guys can. If you didn't do the ribbon trade with me, you can do the blue arrow there. Okay, I suspect everything's going to go down a little bit more right here. One of the other things that I want to look at now, I'm sure Dwayne's already gone over all this, and we had talked about it this morning. I thought we were going to get a bounce here. What I was saying is when this bar closed this morning, was it the 11 o'clock bar, 11 to 11:30? If we had any indication that we're going to get a bounce here, then you might consider buying some call options at that point. But we didn't get any indication of a bounce there. We did come all the way down and hit this weekly trading zone. Now on a daily, that may be significant. I thought on the daily, we were looking at somewhere right in here around 512, 515 was a significant number, which was just beyond the midpoint of the retracement of the whole day's action yesterday. Now, the way this candle could wind up is this could end up being a big wick, and you could have a bullish candle here by the time it closes in 15 minutes. But I don't think that's going to happen. It did come down and bounce off the weekly trading zone pretty much to the tick, and we'll see what it does with that. Right? That's the ES. I'm surprised it dropped as much as it did. I didn't think it was going to go that far through the midpoint here. That did surprise me. The NQ, we really didn't have a clue what was going on with that because it was going sideways in here. And the YM is, I was expecting a pullback on the YM up to this level. Now, I was saying this morning that I expect the BBC to get into this level when we got these couple more bars in here. And the BBC did get into that, but we never got the pullback into it. So what I let's see, I gotta take it. what I would be looking for now, if it gets down here and starts to go sideways a little bit, look for the black line to get inside the MA1 and then look for the pullback to the BBC. But I don't think it's going to happen at this level anymore. I suspect that it'll probably be down here at the weekly trading zone. Somewhere over there is what I suspect now. Now, I was expecting the BBC to get into that level that I just had that at this point. This is the next point right down here. Okay, moving forward a little bit. And somehow I got disconnected. Let me connect that back up. And I get disconnected. Now I can't trade. Yeah. I have something somewhere that's too long on right here. Okay. Let's have it reconnect for us here. And there it is. Okay, so it's already done some of that. I was expecting it to get into here, and now I'm expecting it. This is the YM. This is the S that I was talking about. Wasn't it the S? Get it back. Okay, here it is. Yeah, it is the YM. So earlier I was expecting it to get into here. Now you see how it's gone sideways a few bars as the black step line. If we close up and the black step line gets into the MA1, it's going to get back into here, and that should happen over here, is what it's looking like to me. The Russell, wow. This is what we're looking for the Russell earlier when we were in on this bar right here. We're looking for that and right through it. I'm surprised at this. We are now at the midpoint. We are near the lowest weekly trading zone of the month on the Russell, and we're at the midpoint between those weekly trading zones. So, and we could see a bounce here. And if we do, you want to see the black step line get inside the MA1, which would push us back up to the BBC. I don't know when that's going to happen, but it looks like it'll probably happen and push it back up to this level over here at some point in the future. In the future, but at some point in the future. Push it back up to right around that level there. All right, that's enough of that. Let's get in here and trade some if we can. The NQ is kind of sideways right here. It doesn't have anything that I'm really interested in trading. The ES had a green arrow that needs to put in a lower swing. The Russell doesn't have anything here either, and the YM doesn't really have anything there. Okay. Does anybody have any questions about any of this stuff? Anybody? Rachel. How to change range settings on TradingView? Chris, let me show you. It has default range settings of 1, 10, 100, and 1000. Those are default settings that it has. Okay. You go in here, and at the top, it says add custom interval. Click on that. And in here, select range. You can add whatever you want in here. Like I don't think I have a 53 range. So if I click add, then it's going to add the 53 range right here. If you want it to show up here in this list, you got to star it. All right, it's like right now I don't have the 53 range up there, but if I click on this, now the 53 range is up there. You see it? And you can go through and delete all these if you want to, delete whatever you want. Over time, looking at different things, like when I'm looking at Bitcoin on a range where I look at a 10,000 range. Okay. And looking at, depending on the price of whatever the underlying security is what the range bar I base the range bar size on. Usually. Right, if I'm talking about stocks. When I'm talking about futures, I base it on volatility. But when I'm talking about stocks, I base it on the underlying price of the security, stocks and crypto. Okay, because with stocks and crypto, if you go back out here to this guy, and this is the YM, but if we change it to Mr. MSTR, which is around $500 a share, I think, right? change it to Mr. You can't do that on a 50 bar because it's $1,500 a share. You can't do that on a 50 bar because the 50 bar is 50 cents. So you'd want to do it probably on a 500 bar. So each bar is $5. Okay, that's more meaningful. Each bar is $5 in there now. And maybe even $5 is enough. You might want each bar with a $1,500 stock. You might want each bar to be $10. And then you get more meaningful trades. See what I mean? So like for the YM, or we'll do the MYM again. MYM. Do the micro YM. Now 500 on this is no good because you can go a week with the 500 range or 1,000 range. But if you drop that down to the 50, 50 range on the MYM is certainly something that's doable and happens over and over again. During the break, I was trading the ES on the 7 range, and there were a ton of trades there on the 7 range using this thing during the break. So that's how you do it, and that's what you base it on. That's what I base it on anyway. It just makes sense. Okay. You are welcome. All right, so on the ES, we're looking for it to pull back up and test the ribbon. On the Russell, we're looking for it to pull back up and test the ribbon. On the YM, same thing. The ribbon's in the weekly trading zone here. Now, what I was saying earlier, when I said look at this on the 50 range if you want, and go to the MYM if you want to do that to reduce the actual dollar value of your risk. The weekly trading zones are still in the same place, guys. On the bigger contract, the weekly trading zones are still the same place, so they work the same way. You're below the BBC, it's trying to get to the zone down below. When you're above the BBC, it's trying to get to the zone up above. So in this case, if you want to just work with that theory, take that theory, and if you're below the BBC, price is trying to get to the zone below. If you're on a 50 range chart and you get in here a black arrow, we'll say, all right, you get a black arrow short trade. Now on a 50 range, you're going to be looking at the black arrows a lot differently. They're going to be more meaningful, and the black arrows are significant. Every time you come out of the overbought, it's going to be significant. You might want to take those black arrows. And here with the 50 range, if you had 2 contracts on, you can put your stop 55 ticks away, just above the bar that got you into the trade. So you'd have a $55 stop on that, right, with 2 micros. And you put your target right down here at the weekly trading zone. And that's one trade right there from 48.90 all the way down to the weekly trading zone at 47.33 for 160 ticks. Now 160 ticks with 2 contracts on is $160, right? So you risk 55 to make 160 on that easy trade. You got indication to go short going down to the next weekly trading zone. Same thing here. Once you got through that weekly trading zone and pulled back up to it, you got another indication to go short from here down to the next weekly trading zone. See where I'm going with this? The future. We want to make it easier, not harder. I want to get through this month, 24/20 blueprint, and then you'll see. Chris, you'll be glad you upgraded to Passport though. All right, so over here, this green arrow did not put in a lower swing, so we're not going to be taking another trade on that. Okay. Now, on the Russell here, we want that to hit the ribbon. If it doesn't actually hit the ribbon right here, this is one of those black arrows you could take on a pullback. Right? If we pop down out of the overbought right here like that, it's a black arrow you could get on the pullback right here on the Russell. So if you do what I just did and put a limit order up above there, that got me in on the pullback. So now if it gives me the down close, I'm going to have a better entry on a blue arrow right now. Right? A much better entry on a blue arrow. Okay, nice stop. Actually slipped me favorable way that time. All right, so now my stop should go to break even because I've got 4 ticks in profit. I think I should pop it to break even. There it is. And now I have a better entry on the crap. I have a better entry on the blue arrow. So my entry was up here on that blue arrow trade. I ended up getting break even on it, but that's what I mean when I say, if you get a black arrow right near the ribbon like that, wait for the pullback. If you can. You can still take the black arrow, but wait for the pullback. And then if it does end up bouncing off the ribbon like this one did, you get a better entry on the blue arrow. So the blue arrow should now push all the way down here and give you what you want. Okay. Okay. So we're getting the lower swing right here. That's what we're looking for on the Russell. Everything is just tanking today, and it's not a bad thing. It's not a bad thing. Right now, while everything is dropping, guys, it is time to start looking at the call options. There is blood in the streets. That's how you benefit from it. Right? We have high impact news coming out tomorrow morning, and that could push us further down, or it could work out to our benefit. But I know right now you can get into some things pretty cheap right here, and don't risk money you can't afford to lose on options. Okay, really on anything, but particularly options. All right, so on the ES right now, we are testing the ribbon. Everything else is starting to run right here, but the ES needs to stop right here at the ribbon. It may, I don't know. Look for the down close on this. 74.75. Wow, that's what time it was. 74.75 down to 72.75. Okay. Now it's going right up even a little higher. So now you got to wait for the green arrow, right? 75.25 down to 73.25, 75.50, 75.75. 73.75 is what the down close is going to be at now. Now we are in a downtrend, so we should be able to take the green arrow, expect the green arrow right here, and I am set up to expect the green arrow right here. Right, 75.75 down to 73.75. Get the down close, it should pull out of the overbought, and it should give us the green arrow right here. Right, everything else is starting to run right here, so I don't know if this closes up, then I'm going to cancel the order, but if it closes down, we're going to get filled. And this will be my last trade of the morning session. Last trade of the day in here in a room anyway. I do have another meeting coming up here in 30 minutes, so I can't play at this point too much. Right, it closed up, so I'm going to cancel the order. All right. Well, that is that. We have 1 minute left for me. That did not close down, so I don't think we're going to get any kind of an arrow here. Now, my green is different on this. After I did that thing yesterday, I changed the green to a different color green. Let me fix that. Bars down, bars. We're going with a darker green in there. I think it's that one. Yeah. No trade there. We have a blue arrow over there on the YM. Okay, blue arrow over there on the YM, and it's actually time for me to wrap it up right here. So I think that's what I'm going to do. Is I'm going to wrap it up and send it back out to Fabulous Phoenix, Arizona. Again, if you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. If you sign up for the trial today, your trial will run right into next week. Okay. If you do this trial right now, you get click on that button. There's no credit card required for the trial. It's going to bring you to the registration page. You fill out this page. We'll set up your indicators for you, and you'll have them over the weekend. All right, we get them set up for you today, and you'll have them over the weekend, and you'll have them all next week. All right, that is the way to take the trial. You get a little extra time in it, and you get them over the weekend as well. You get a whole extra 3 days of it. So go here to mytradingiq.com, click on the purple button to take the trial. All right, and with that, I can pass it back out to Fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yep, I am.
Yes.
Recap of the morning session.
Today it took 6 minutes and 2 trades to get to $2,200. And Chris, I was just going to answer Chris's question, but he left.
Good job.
All right. Excellent. All right. Partners meeting tonight, guys.
All right, guys. Earlier, I gave you the recap from last night. I didn't notice the one that Valerie had sent me this morning. And she's traveling today, so she'll update this afternoon with everything that was put out today. 300, we're in week 313. And as of 8:30 a.m. this morning, we had issued over 17,400 individual handcrafted alerts since Sunday night when the markets opened. 75 alerts, still waiting on 18, 56 actionable, 14% would have been stopped out based on market structure and the very simple process we teach all of our passport holders in their one-on-one mentoring sessions. Over the 313 weeks and 17,400 plus alerts, we've averaged on a weekly basis 20% or less of the alerts being stopped out. Again, based on market structure and that very simple 3-step process. Now, for those of you that arrived late, that's okay. We still love you. The CTAs, all of our members had all of these targets right when the market opened last night. It's usually more like 6:15, 6:20, 6:30. But I was at my desk and was able to get them out. Now, at the beginning of the broadcast, I explained how you make use of these. Once you've mastered the Logic 247 alerts, and I've learned how to read the chart. That's important. So let's pick up where we left off on the Russell. One of the biggest single day drops in the Russell we've seen possibly ever. Now, this may be the low. The step line is starting to cross red and falling. And when the step line crosses red and falling, it's an indication that price is going to attempt to retrace back to the BBC. We opened right here below the BBC. We attempted to get above it, but we ran into red and falling, which pushed us right back down to the zone where we consolidated. That's what happens 70% of the time. Support sends us to resistance. Resistance sends us to support. Now, these are the zones that were published Monday morning at 6:15 a.m. Eastern. Once they're published, this December is going to make 15 years that we've published on a weekly basis. Once they're published Monday morning, they don't change in any way whatsoever. Carved in stone for the entire week. So support sends us to resistance. Resistance sends us to potential support. Now I could take you on a journey over here and show you why the support kicked in here. But if you're interested in learning how to trade, you'll go check it out yourself. If that step line crosses red and falling, then again, this may be the bottom. It's a long trek back. Now there's potential resistance, obviously, here at the zone. But when the step line crosses red and falling or blue and climbing, that means price is going to attempt to retrace to the green line, the BBC. Bull bear cross. Bullish above it, bearish below it. On the NQ, here's where we opened last night. Ran right up to the target and beyond. Pulled back to the target, and that put blue and climbing overhead, which is potential resistance because it's probably on its way to turning into red and falling, which is bearish. So that sent us back to the BBC support. Support sent us to resistance at red and falling and the target. Then we caught a drop right here. Okay. Slow from yesterday. There it goes again. Support. Sends us to resistance. Sends us, we're still looking for support in the NQ. Tell you what, if those two tech titans that report after the bell today, there's a miss, this is going to get pretty ugly. Now, step line does not look like it's trying to cross. It's starting to slant towards red and falling, but it's really not showing any indication. I suspect this is the next to the lowest zone right here at 18,883. We very well may see that before we see any kind of a retracement. Crude oil, here's where we opened last night. We immediately got in a position where blue and climbing is directly overhead. Resistance on its way to becoming falling, which is bearish. We did pull back to the BBC, and the pullback holds more often than not, so we caught a bounce. Didn't make it all the way up to the target, though. That's in and of itself a sign of weakness. Okay. Resistance sends us to support. Back to resistance, back to support, back to resistance. Double top here. Then we get the bearish cross. Red line gets below the green line. Bottom fell out. We hit this zone, we consolidated. That's what happens 70% of the time. Now, when you have a slice like this, now this candle opened green. It tried to get back to the zone it sliced through so that it could then continue in the direction of the slice. There wasn't enough buying pressure to push it back to the zone. And that's typically what we see more often than not. So we consolidated for hours at the zone. Now we're dropping. And where should we look for support? Just about there. 76.55. And then 76 bucks. And then the zone, 75.70. Still two more zones below that. Gold. All right. Gold rallied big yesterday. Remember, the vertical line separates today, Thursday, Wednesday, Tuesday, Monday. So over the last few days, gold's had a very nice run. From 24.25 weekly zone. So 75 bucks, give or take. Well, not now because we've pulled back. So we opened last night. We managed to punch through resistance, hit the target, came back to the BBC, the pullback held. Support sent us to resistance at red and falling. That pushed us below the BBC. Got a bounce, got back above the BBC. Red and falling turned to blue and climbing. Took us back to the long target. Resistance, which took us back to support at the BBC. We got a series of lower highs. Now we've gotten ourselves into a situation. Now this low right here, bullish cross. When you have a bullish cross that leads to an extended move, the first time price revisits that area will almost always be good support. Same's true of a bearish cross. Now on this second attempt, managed to trade below it. Look for support at 24.78, 77, 74, 67, 63, 61. The zone at 24.56/7. Okay. Silver. This was the opening candle last night, just above the weekly zone. We went sideways, which put blue and climbing directly overhead. Resistance. See, on the way up, it's your friend. Got price, the step line, blue and climbing. It's the perfect stack. But once that step line crosses, black step line crosses blue and climbing, it's an indication. Go back to the VVC. Now, as you can see, the pullback holds more often than it doesn't. Even when it spikes it like that, it still holds. Eventually, it'll trade through, as it did here, and found support based off this low from yesterday. Right there. See? Support sends us to resistance, back to support, back to resistance, back to support. Now we hit the target, bounced. We traded through it, but we caught a bounce. But as you can see, now consolidating at the weekly zone. The silver, you only need 2 pennies. That's it, 2 pennies to get your go for the day. This candle opened at 28.52. Put in a low at 28.39. Remember, 2 pennies is $100. A $1 move is $5,000. When crude moves $1, that's $1,000 per contract traded. When gold moves $1, that's $100 per contract traded. When silver moves $1, that's $5,000 per contract traded. So from 28.30 right here, 29.30, that's a $5,000 contract right there. Imagine if you've earned the right to trade 10 contracts. Now the support, why did price stop falling? Now it got through the zone a little bit. You see this low yesterday? Got to break through that. If we break through that, then your next area for support is right here, 28.32. And then you clear all the way down to the zone at 28.23. So we've given back about 50% of that. Well, not quite 50% yet. More like 38 from these lows to the side. Euro, we opened last night. Managed to go up and hit the zone. Couldn't get through the zone. When price rallies up to a zone, we expect resistance. When it drops to a zone, we expect support till proven otherwise. And we dropped right to the short target. Traded through it. Traded through the zone. Caught a bounce. This high here, this high here. Now we're back consolidating again right below the zone. But blue and climbing has turned to red and falling. So the potential for lower prices is quite possible. And this is the lowest weekly zone this week for the euro, and we still have another day left to trade. Now, based on the past 15 years of history, even though we've traded below the lowest zone, based on history, by close of business tomorrow, price will be at or above the lowest zone. Are there weeks when some of the markets close above the highest or below the lowest? Yes, there's in 15 years times 52 weeks. Yeah, there's been a handful or two of times when different markets will close above or below. But 9 out of 10 times, maybe 9.5 out of 10, will close inside the playing field established by the zones at the beginning of the week, Monday morning, 6:15 a.m. Eastern. Okay, this is what we were talking about in the live training room this morning when I popped in. Also, I posted numerous charts in the passport discussion group and the trial discussion group, and I talked about it at the beginning of the broadcast. Out of the last 5 trading sessions before today, it's 38% fib retracement. Now that's from the April 19th low, the all-time historic high, support, 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 support. So 1, 2, 4 days, 4 trading days out of 5 trading days, the 38 has served as good support. And it looks like we're about to test it. We made it through the step line, that was potential support. We made it through red and falling, that was potential support. Now the 38. Now you got this double bottom right here at about 54.32. And then you got this triple bottom right here, 394, 95. And then the 50% fib retracement, 53.70. Now, when you hit a 50% fib retracement on a daily chart, that's almost always good for a bounce. Now, we had a huge bounce. We had an initial bounce off the 38. This huge bounce yesterday was, of course, tied to the Fed announcement. And then we spilled over. So we traded a little higher last night at the open. And then reality sunk in, and well, there we are, back at support. To become a member, go to mytradingiq.com. If you have questions, call 949-42-EMINI or send an email to support@cfrn.net. As a passport holder, you'll have what 9 out of 10 new traders don't have: someone to teach you how to trade. 2 hours every trading day in a group environment. Plus, as a passport holder, you have access to one-on-one private mentoring, no extra charge. The strategy you learn, the indicators that you own as a passport holder, are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETF. Price flows the same across all markets and all time frames. Support to resistance, back to support, back to resistance, over and over, again and again. It is a never-ending cycle. As a passport holder, you'll get the Logic 247 alerts, the concierge trade alerts, get the weekly trading zones Monday morning at 6:15 a.m. Eastern, and you'll be able to attend the members only workshop every Thursday night at 8 p.m. Eastern. Not only will you be able to attend the members only workshop, but you'll get the golden key that unlocks the private channels in Telegram, where we archive previous workshops. Do you need to watch years of workshops? No, not really. It's a nice resource to have, but just show up and ask questions. Because if you go back and watch the previous recaps, you can, hear questions that other people have asked. Maybe that's not going to answer your question. So if you've been on the trial and it's time to make a decision, Valerie's traveling today, but there is still time if you want to become a passport holder. We'll get you signed up and we'll get an invitation out to you so that you can be in the workshop tonight. And again, to members, please have your questions ready. Okay? Everything a trader needs, all under one roof, one low price. Let's go to our good word for the day. Give God all the glory. Psalm 44:3. For they did not gain possession of the land by their own sword. Now, you've probably heard this story before. A frog was running out of water. I don't know how a frog runs out of water, but so he asked two birds to transport him to a nearby pond by having each bird carry one end of a stick in their beak while he bent down on the center of the stick and held on. It really was a sight to behold. Two birds, one stick, and a frog in the middle. A cow looks up and sees this odd trio passing overhead and asks, "Who thought of that?" Oh, the frog couldn't resist. Pride prevailed over prudence. "It was me," he yelled as he plummeted to earth. Don't make the same error. Pride goes before destruction, and haughtiness before a fall. Proverbs 16:18. Why are you good at doing what you do? For your own comfort? To save for your retirement? Bolster your self-esteem? No, these are all bonuses, not the main reason. You're good at what you do for God's sake. It's all about Him, not you. And that's tough for some folks to swallow. Read and ponder these words, not in your head, but in your heart. 1 Chronicles 29:12. Wealth and honor come from you alone, for you rule over everything. Power and might are in your hand, and at your discretion. People are made great and given strength. Recalling the victories, blessings, and successes Israel had experienced, David reminds us in Psalm 44:3, for they did not gain possession of the land by their own sword, nor did their own arm save them. But it was your right hand, your arm, and the light of your countenance, because you favored them. Keep in mind, blessings you enjoy every day are yours only because God favored and smiled on you. That, my friend, is nothing but the truth. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.